I am DK Sinha and you are watching DK Global Market Insights. Today we are doing a complete deep dive on Nvidia, one of the most important companies powering the global artificial intelligence revolution. Before we start, an important disclaimer. Market returns are never guaranteed, but when we do the research like fundamental analysis and technical analysis, we do get an edge in the market, but risk management cannot be ignored. In this video, we will understand Nvidia's fundamentals, its latest quarterly earnings, analyst growth expectations, valuation, and then we will switch to the charts for technical overview. Let's begin. Nvidia at a glance. Nvidia is world leader in high performance chips that train and run artificial intelligence models. Its data center products, especially the H100 and H200 and the upcoming Blackwell series, are used by almost every major technology company including Amazon, Microsoft, Google, Meta, and many AI startups. What makes Nvidia special is not only the hardware but also the CUDA software ecosystem. It creates a powerful competitive advantage, making it very difficult for competitors to catch up. The Nvidia CUDA software ecosystem is a comprehensive and vast collection of software, tools, libraries, and frameworks built around the proprietary CUDA Compute Unified Device Architecture platform. With this background, let us move to the Nvidia's fundamentals. Past earnings performance. Nvidia has delivered exceptional earning growth over the last several years. In the past 5 years, the company's annual earning grew by 61.4%, while the industry average was only 5.6%. Even in the last 1 year, Nvidia's earnings grew by 57.5% compared to just 3.3% for the rest of the industry. This shows how strongly the company's business has expanded during the AI boom. Nvidia is not only growing faster than the industry, it is growing many times faster, which clearly reflects its leadership position. Profitability ratios. Nvidia is one of the most profitable companies in the world today. Its ROE is 83.4%, which is extremely high. Most companies struggle to reach even 15 to 20%. Its ROA is 60.3% compared to the industry average of around only 6%. Its ROCE, that is return on capital employed, has increased from 21.9% to 81.5% in just 3 years. These numbers show that Nvidia uses its capital very efficiently. Whatever money the company invests in its business generates very strong returns, supported by high demand and pricing power. Balance sheet strength. Nvidia also has a very strong balance sheet. Its debt to equity ratio has reduced from 45.3% to only 7.1% over the past 5 years. This means the company has become far less dependent on borrowing. Its debt is covered almost 982% by operating cash flow, which is extremely comfortable. The company also earns more interest than it pays, so the interest payment is not at all a concern. Overall, Nvidia is in very healthy financial position with a strong cash flow and very manageable debt. Analyst growth forecast. Analysts expect Nvidia's strong growth to continue in coming years. Company's earnings are forecasted to grow at 25.7% per year and revenue is expected to grow at 25.5% per annum. Even the future return on equity 3 years from now is expected to remain quite high at 49.1%. This means analysts believe Nvidia will continue to benefit from AI adoption, cloud computing, and data center expansion. Even though the company is already large, it still has a long runway for growth. Institutional holdings. Nvidia is strongly supported by institutional investors. Foreign institutional investors hold around 68% of the company, and this level has remained quite steady over the past several months. Mutual funds also hold 70 to 72% of the stock. Stable institutional ownership usually signals long-term confidence in the company's fundamentals and outlook. Fair value estimate. Based on the discounted cash flow model, Nvidia's estimated fair value is around $163.79, while the current price is around at $178. This shows the stock is trading at roughly 8.6% above its fair value or intrinsic value. A small premium like this is quite normal for a high growth companies with strong fundamentals. Investors usually pay higher price for quality and consistent growth. P ratio versus peers. Nvidia current price to earning ratio is 43.6 times, and the fair P based on growth expectation is estimated at 68 times. When we compare Nvidia with peers, AMD trades at around 107 times, Broadcom at 96.6 times, Qualcomm at 31.5 times, and Micron at 29.5 times. This means Nvidia is not the most expensive stock in semiconductor space, but it is also not the cheapest. Valuation sits somewhere in the middle, justified by its dominant position and strong earning growth. Q3 FY26 earnings breakdown. Nvidia recently announced its Q3 results for FY26, and the numbers were extremely strong. The company reported record quarterly revenue of $57 billion, which is a 22% increase from its previous quarter and 62% increase year on year. This shows that the demand for Nvidia's AI chips is growing very fast. The company's net income for quarter rose by 65% year on year basis to $31.91 billion compared to $19.31 billion in the same quarter last year. To understand how strong this performance is, consider this comparison. In the first 9 months of FY26, Nvidia's net profit was $77.1 billion. During the same period, combined net sales of Intel and AMD together were $57.4 billion. So Nvidia's profit alone is higher than the total sales of two of its biggest competitors. This highlights how dominant Nvidia has become in AI era. For the next quarter, Nvidia has forecasted $65 billion in revenue, which is higher than the analyst expectations of $62 billion. Technical analysis. Now that we have covered Nvidia's fundamentals and quarterly performance, let us switch over to the chart to understand stock's historical price action, key levels, and overall technical structure. This is the monthly price chart of Nvidia. What we can see over here is that the market structure is higher highs and higher lows, and the price is taken support last time when this correction took place at EMA 21. So EMA 21 in the recent time has acted as a dynamic support. Now if you see the current month's candle, there is a bearish engulfing candle under formation, although the month has not yet closed. So we do not know where the final closing will take place. But why this correction has started, let us check it out using the chart patterns. Here is the breakout of the bullish flag pattern over here, and this is the prior impulsive wave. So if you do the projection by using the height and projecting from the point of correction, so what we see, that it has attained the level of 61.8% and the correction is starting. So after this pullback is over or correction is over and then trend resumes, then the next possible move could be to 100% expansion in a little long terms. It will not happen in a single day because the market structure remains higher highs and higher lows, and many pullbacks takes place during the process. Now this is the weekly price chart of Nvidia. What we can see earlier, there was a continuation chart pattern breakout. If we project the level based on this formation and project the level over here, again 61.8% level attained, and this correction has started or pullback has started. Now, where the price is taken support, if you see the last candle of 24th November 2025, it is a spinning top candlestick pattern that indicates there is a lack of downside momentum, and that too, this kind of pattern is coming quite in proximity of EMA 21, where earlier also the price has taken support. Now we refer to the daily price chart of Nvidia Corporation. What we can see during this period, it was in a downtrending move and the market structure was lower highs and lower lows, and the price started trading below all critical moving averages. But now what has happened? There is a golden cross over here, and now the slope of SMA 144, which has become flattened, now has started rising. So short-term trend, intermediate trend, long-term trend is bullish. Here in the recent time, we can see a pullback which is complex in nature. It looks like a ABCD pattern. So overall structure is bullish. It is trading in the markup phase where we expect the market structure could be higher highs and higher lows kind of market structure. When it is in a markup phase, the best strategy could be to ride the trend and trail the stop loss as per the market structure. Conclusion. To summarize, Nvidia continues to deliver exceptional financial performance with strong earning growth, outstanding profitability ratios, very healthy cash flows, and record quarterly results. The company has maintained its leadership position in AI hardware and continues to benefit from rapidly increasing demand. This video is for educational purposes only, not a stock recommendation. Learn the process of hybrid analysis. If you enjoy deep dive fundamental and global market analysis, make sure you subscribe to the channel for more such content. See you in the next video.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Yes.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.